Yeah, so my name is Daniel Bartsch. I'm a co-founder of creditshelf and current CFO of the business. When we first founded creditshelf in 2014, we did so because we realized in our banking careers at the time that SMEs were not treated by banks in a way that they would expect to be treated. And the availability of credit for the sector obviously is very, very important. However, banks, under some circumstances, they fail to provide credit and also the amount of credit which is required by the SMEs. So creditshelf has been established in 2015. We have lent cumulatively in excess of 500 million euros worth to German SMEs. So we're only operating in the German market, a market where you could think from the outside that it is relatively well banked. However, what we realize is that banks leave certain white spots, when it comes to providing credit to those SMEs. And that's most notably the case when, for example, there's not enough physical collateral available to back the loans. These are situations that we see often with our clients. So they typically have one or two house banks, but the banks are lending very conservatively against physical assets. And the availability of unsecured credit is difficult, at least for the SMEs that we speak to. And so our solution is a very vanilla, easy process and quick time to market unsecured business loan. What sets us apart from other, say, non-bank and also bank lenders is the process that we've put in place technology-wise. So our process is heavily supported by technology, particularly in the early stage of the underwriting. At the end, we do also make use of analysts to look at each of the cases and round up the decision. That said, we target the traditional German Mittelstand company, and these are companies that are pretty established. So it's not the sort of startups that don't have any track record or history. Our average client is has around 20 years of existence, and therefore it's not the sort of very small businesses. It's the traditional German Mittelstand, and hence our tickets, they go as high as 5 million euros. So that's probably setting us apart from some of the smaller sort of business lenders that are out there. On the other side, we're not big as compared by private debt funds, right? So we're basically filling the niche between, I would say, very small business lenders on one side and the debt funds that would really typically go for larger type tickets, and that's where we position ourselves in the non-bank financial space. Yeah, that's exactly what we see as well. And obviously, the macroeconomic cycle at this point in time doesn't support these businesses. They're also facing headwinds in the markets in form of inflation, generally speaking, supply chain interruptions, and uncertainty when it comes to the outlook. So clearly, against this backdrop, banks are retrenching from certain segments of the market, and I think availability of credit from banks has become, I would say, even more difficult over the past 1.5 years or so. And that's what we see as a general concern. I think you have to understand that the SMEs, particularly in the German market, they're the backbone of the German economy, and it is therefore imperative that we provide and channel funds into this market segment. And we in creditshelf, we have the strong belief that by enabling those businesses to focus on their core markets and on their core products and services, instead of having to spend hours, days, if not months, which we often hear, to get through a standard credit process in a traditional brick and mortar bank, that helps them to basically do their business in an efficient way, which is why we believe that availability of credit should be an easy process, and it should not be a headache to the businesses. And that's what we're here for. So obviously, from our perspective, when we lend money, we want to make sure that the money we lend comes back, and not just the principal, but also the interest. And therefore, we look at the ability of the business to generate cash flows. I said earlier that our business is typically unsecured, hence we don't lend against physical assets, we lend against future cash flows. So we need to understand the businesses, their ability to generate cash flow, and also look at obviously, other factors that include, let's say, their ability and also their requirements to pay existing debt. So all of that needs to equate for us to be able to provide a loan. We want to see enough buffer that even in a potential more adverse scenario, we should be safe. And therefore, we look obviously at financial metrics. We also look at obviously the business and the sector the business is operating in. We want to understand, the management and their experience and motivation going forward. So these are all factors that we put into our final opinion. And again, the process is streamlined in a way that we start typically with the quantitative and pure fact-based, number-based information, and then we at the end work ourselves through into the more sort of qualitative aspects, and then sort of rounding up a final decision on the case. Yeah, I think it's a great opportunity to be in touch with, the market and the market participants. I think it's a fascinating space, to be honest with you. My own, obviously personal, but also business belief is that the non-bank, financial intermediaries market will gain ever more traction, simply because I think banks are failing to operate efficiently against the backdrop of the current conditions in the market and the regulation. So I think, it's a great opportunity to network, meet other people, get other, perspectives in terms of, how people look at the market and where they see opportunities. So I'm really looking forward to it.